Hello and welcome back to the Financial Phenom. I'm Ten Bagger Prodigy, and in today's episode, we're diving into the upcoming week in the markets, key earnings to watch, and some exciting chart setups. We'll also discuss the contrast between recent layoffs and market highs, and speculate on what we might expect from the FOMC meeting in just 3 days. Let's get started. First up, it's a big week for earnings. Major tech and industry giants like AMD, Microsoft, Amazon, Apple, Meta Platforms, and Alphabet are set to release their reports. The performance of these companies can significantly sway market sentiment, so investors, stay tuned. Now let's look at the economic calendar, which is brimming with important data releases and events. Tuesday, January 30th. Starting at 10 a.m., we've got the JOLT job openings for December. Analysts are forecasting 8.69 million openings, slightly down from the previous 8.79 million. Also at 10 a.m., the Consumer Confidence Index for January will be out. Predictions are for an increase to 114 from the previous 110.7. It's a key indicator of consumer spending. And don't miss JetBlue's conference call, also at 10 a.m. Wednesday, January 31st. At 8:15 a.m., we'll see the ADP Employment Change Report for January. The forecast, 125,000 new jobs, a dip from the previous 164,000. Boeing's conference call is scheduled for 10:30 a.m. Always interesting to hear from this aerospace giant. The big event at 2 p.m. The Federal Reserve's interest rate decision. No change is expected. But in today's market, anything can happen. Followed by the Fed's press conference at 2:30 p.m. This could provide insights into the Fed's future monetary policy. Thursday, February 1st. Early birds. Catch the EU inflation rate at 5 a.m. for January. It's forecasted at 2.8%, slightly lower than the previous 2.9%. At 8:30 a.m., the US jobless claims are out. Predictions are for 218,000, a slight increase from the previous 244,000. And finally, Friday, February 2nd, another busy morning. At 8:30 a.m., we're looking at the non-farm payrolls for January. Forecast, 175,000, down from the previous 216,000. The unemployment rate for January is also expected at the same time, forecasted to remain steady at 3.7%. That's a lot to keep track of, but don't worry, we've got you covered. Now, onto some charts, starting off with the big kahuna, the S&P 500. Last Friday, we spotted a doji candle on the daily. That's trader talk for we're not sure where to go next. After a solid climb, the market's pausing for breath. With the FOMC meeting in the pipeline, the vibes are a mix of anticipation and caution. That 49.50 mark, it's like a high fence we're all eyeing. Jerome Powell's next move could be the key. Will he keep the money magic going? Or is it time for a reality check? Shifting gears to TechTown, QQQ didn't have the best day, ending at $431.81. Those charts are looking a tad grumpy. We're talking red candles on the weekly and daily that could spell trouble. With major tech earnings on the horizon, it's like we're on a tightrope. If these tech titans wobble on their earnings, we might see QQQ take a nosedive. Those gap downs are lurking, so keep your eyes wide open. Now, let's talk about IWM, our small cap superstar. We're seeing a classic cup and handle on the daily, hinting that small caps might be the dark horses leading the next market rally. Last week was all hush-hush on the movement front, but don't let that fool you. These small fry can make big waves, so watch those levels between 200 and 188. The US dollar is still flirting with its 200-day moving average, like it's playing hard to get. But with the FOMC meeting on the horizon, this coy dance could turn into a full-blown tango. A breakthrough or a step back? That's the multi-million-dollar question. The VIX, our beloved fear index, took a bit of a tumble to 1325, shedding 1.56%. It's like watching a suspense thriller. Will the FOMC meeting be the plot twist that sends it spiraling down or soaring up? Crude oil's bouncing off the 70s on January 17th, like it's the last lifeboat on the Titanic. Biden's SPR refill mark has turned into this immovable line in the sand. The charts are whispering of higher prices, and for you energy stock enthusiasts, this could be your siren call. Apple's chart is painting a picture, and it's not the prettiest. We've got a head and shoulders pattern unfolding, and it's like watching a suspense drama. Will the earnings be the hero to save the day, or is it heading for a cliffhanger? NVIDIA's had its moment in the sun, breaking out of an ascending triangle. But now, there's a hint of exhaustion. With the FOMC meet just around the corner, the bulls and bears are gearing up for a showdown. And then there's AMD, riding high and hitting our targets. Its earnings are the next big scene. Will it soar higher or take a dive? Bitcoin, always the rebel, shrugged off our downside target and found some buddies at 38K. It's like a wild card. Will it rise to complete a head and shoulders pattern for further downside? A big shout out to IBM, smashing earnings and dishing out not one, but two 10-bagger opportunities. For those who join me on this wild ride, take a bow. That was one for the books. Now, here's a puzzle. Despite a wave of layoffs, the market's strutting around setting new highs. It's a stark reminder that the stock market is like a complex character in an epic novel, not always reflecting the ground reality. And finally, the star of this week's show, the FOMC meeting. Jerome Powell's in the hot seat, and his words could either soothe or rattle the markets. Hawkish, dovish, or something in between. We're all ears. That's it for today's deep dive. If you loved this detailed rundown, smash that like button, hit subscribe, and ring that notification bell for more in-depth market analysis. Drop your comments, questions, or even your predictions in my Twitter, which my handle will be in the description below. I'd love to hear them. This is your 10-bagger prodigy signing off. Keep your wits sharp and your trades sharper. Happy trading, and see you in the next video.